ABSLI Platinum Gain Plan. Will investing in this policy really worth your hard-earned money or not? Is this a smart investment for your future, or do you need to think twice? Let us find out the answers to this question through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals more faster and smarter way. So before analyzing whether this policy is worth investing or not, let us first understand a few basic details about this policy and how it briefly works. So ABSLI Platinum Gain Plan is a unit-linked, non-participating individual life insurance plan. And some of the key features of this policy are you have the choice of sum assured multiple of 7x and 10x, and you also have life cover provided for you throughout your policy term, which might ensure that your family is financially secure even in your absence. And there is flexibility to choose from a wide range of policy terms and premium payment terms. And there are choice of 5 investment strategies and 18 fund options to suit your varied investment needs. Wealth boosters and loyalty additions are added periodically during the ABSLI Platinum Gain policy term to enhance your fund value, and the return of mortality and premium allocation charges at maturity boost your fund value. So there is also systematic withdrawal facility which helps you to enable the regular withdrawals from your fund value during the policy term to cater to your recurring monetary needs. So these are some of the key features of this policy. Now let us take a look at the benefits available under this policy. First, we will take a look at the death benefit. So, death benefit is given to the nominee or the legal heir in the case of death of the life insured, unfortunately, anytime during the policy term. So, the death benefit will be any of the 3 options given in the screen. So, whichever is highest in value at the time of death of the policyholder, that will be given as the death benefit to the nominee or the legal heir, which can either be the fund value as on date of intimation of death, or the sum assured, or the 105% of the total annualized premiums received till the date of death of the life insured. So this is the death benefit. Now let's take a look at the maturity benefit. So if the policyholder has survived up to the policy term, up to the end of the policy term, then he shall get the fund value in a lump sum or as a structured payout using the settlement option. Additionally, all your premium allocation charge, mortality charge collected excluding GST over the entire policy term will be returned to you, provided all due premiums under this policy have been paid. So this is the maturity benefit. Now let's take a look at the loyalty additions and wealth boosters. So loyalty additions are benefits which are added in the form of additional units to your policy, and also wealth boosters are also added by allocating additional units to your fund starting from the end of your 10th policy year and every 5 years thereafter. So these are some of the benefits available under this policy. Let us take a look at the 18 fund options available under this policy. So the fund options available are Liquid Plus Fund, Income Advantage Fund, Assure Fund, Protector Fund, Builder Fund, Enhancer Fund, Creator Fund, Asset Allocator Fund, Magnifier Fund, Maximizer Fund, Multiplier Fund, Super 20 Fund, Pure Equity Fund, Value and Momentum Fund, Capped Nifty Index, MNC Fund, ESG Fund, Small Cap Fund, Linked Discontinued Policy Fund. So these funds are categorized according to their risk profile and what kind of asset allocation they are given. Sometimes it can either only be debt, money market or equity, or it can be a combined asset allocation. So it's all based on these, and these are the 18 fund options available under this policy. Now let's take a look at the 5 investment strategies. So first is the systematic transfer option. So if you have opted for this option, your premium shall be first allocated to the Liquid Plus Fund option, and thereafter monthly 1/12 or weekly 1/48 of the allocated amount shall be transferred to your segregated fund of your choice. So the percentage allocated to the chosen fund is an increment of 1%, which can range from 5% to 100%. But the total allocation across all funds must be 100%. This option is available only if you have opted for a policy in which you can pay the premium annually. So you can choose up to a maximum of 4 segregated funds out of the Income Advantage, Enhancer, Maximizer, Super 20, Capped Nifty Index, Multiplier, Value and Momentum, Creator, MNC, ESG and Small Cap funds. So out of these funds you can choose a maximum of 4 funds. And next is the return optimizer investment option. So basically your basic premium are invested in the maximizer fund, and then it will be tracked every day for any gains. The gain from the maximizer fund reaches 10% or more than the net invested amount, then the amount equal to the appreciation will be transferred to the income advantage fund. So any future gains are protected from future market volatility as well. So this is the return optimizer investment option. Now let's take a look at the self-managed option. Here, if you have opted for this option, you have the full freedom to control and switch from one segregated fund to another among the 18 segregated funds. But the only requirement is that the percentage allocated to any fund be in increment of 1%, ranging from 5 to 100%. So the total allocation across all funds must be 100%. So this is this option. Now the smart investment option, which your portfolio will be structured as per your maturity date and risk profile. So your annualized premium is allocated between the two funds, maximizer, which is an equity fund, another is the income advantage fund, which is a debt fund, in a predetermined proportion. So over time, this allocation is managed in such a way that it will automatically switch from riskier assets to safer assets progressively as per your policy approaches maturity. So this proportion invested in the maximizer and income advantage fund will be according to the predetermined schedule they have, which you can read in detail in the policy brochure. Next is the life cycle investment option. So this is also a predetermined kind of option where your annualized premium will be allocated between the maximizer and income advantage fund in a predetermined proportion, but based on your risk profile and your age when the premium is invested. So this is based on your age and risk profile. So you can also refer this investment option in detail in their policy brochure where they have given the detailed proportions which according to the age and the risk profile. So these are the 5 investment strategies which you can choose to invest in the policy. Now let us take a look at the charges that we need to pay under the ABSLI Fortune Platinum Gain Plan. So first is the premium allocation charge, which is based on the annualized premium you pay. And next is the fund management charge, which is 1% per annum for liquid plus income advantage, assure, protector and builder funds, and 1.25% per annum for enhancer, creator, cap, nifty index asset allocation funds, and 1.35% per annum for MNC, magnifier, maximizer, multiplier, super 20, pure equity, ESG and small cap and value momentum fund, and 0.50% per annum for the linked discontinued policy fund. So the fund management charge differs among the fund options you choose. There is no policy administration charge, whereas there is a mortality charge which is for providing you with for life cover, and it is based on the gender and age you choose to invest in this policy. And there is no miscellaneous charge, but there is something called discontinuance or surrender charges, which is also based on the year you choose to discontinue or surrender and the premium amount and the fund value of your policy. So these charges are all something which will not, if you compare it with other ULIP, these charges are quite high for market linked products, and also these fees are deducted from your premium and only then the net investment is used for investment. So they do not deduct these fees from the gains, but rather than your net premium itself. So the amount you invest itself will be low, and then the gains you get from that will also be low. So these fees over time will also eat up your returns. Now let us take a look at the advantages and disadvantages of investing in this policy. First, the advantages. So there is no limit on the number of switches that can be made in a policy here, and all the switches are free of charge only if you have opted for the self-managed or systematic transfer investment option. This is not available for the other investment strategies. Next is, after the first policy here, you can change from one investment option to another if you do not like the investment option you have chosen in the starting. And also under the self-managed option, you can choose to redirect your future premiums, which can be hugely convenient for you. And also after completing the first 5 policy years, you have the option to decrease the premium by up to 50% of the original amount, and you also have the option to reduce or increase your premium payment term if your policy is still in force or for the full sum assured. And there is unlimited partial withdrawals allowed at any time after this policy completes 5 policy years, provided the policyholder is at least 18 years old. And for the maturity benefit, you may opt for a settlement option where the company will continue to manage the funds and make periodic payments for up to 5 years. So these are all the advantages of investing in this policy, whereas the disadvantages are no policy loans are permitted under this policy, there is no liquidity during the first few policy years, and the sum assured is inadequate. So these are also some major drawbacks you need to consider before choosing to invest in this policy. Now, as we have understood few basic details about this policy, how it briefly works and all, now let us move on to the main part of the video, where we are going to analyze whether investing in the ABSLI Platinum Gain Plan is worth investing or not by analyzing the internal rate of return, which is the IRR of this policy. So because no matter the advantages or the benefits of the policy, what matters at the end of the day is the returns we get in a hand, right? So that's why we are going to conduct an analysis on the internal rate of return of this policy. So let us just assume, for calculation purpose, a 35-year-old male buys this policy with a sum assured of 20 lakhs. So the policy term is 20 years and the premium paying term is 10 years. The annualized premium is 2 lakh rupees. So if he pays the premium regularly, he is eligible for the fund value at the end of the policy term. So how we are going to calculate the IRR is that two different assumed rates of future investment returns. So the 4% per annum is to represent the worst case scenario, whereas the 8% is to represent the best case scenario, because this is a market linked product and we do not know how the market will perform, right? So based on that, we are just using these two assumed rates of return. These are not guaranteed returns, or they do not represent the upper or lower limits of the potential returns. This is just to show you the calculation. So if we calculated the IRR for the 4% per annum, which is the worst case scenario, what we get at the end of the policy term is 30,63,861 rupees for a IRR of 2.77%, which is comparable to the rate of return you get in your savings bank account. So even if you do not invest your money for anywhere all these years and just kept in your bank account, which is the savings bank account, even then you will get a similar rate of return, which is definitely not worth it or justified for such a long term investment where we are taking such a long risk. Still, if you are getting the returns which is comparable to a savings bank account rate of interest, it's definitely not justifiable. But if this is the worst case scenario, then if you compare it with a best case scenario where you get a return of 55 lakhs 5,816 rupees for an IRR of 6.63%. So as per the ABSLI Platinum Gain Plan maturity calculator, this is the IRR for the best case scenario. So 6.63% is comparable to a debt instrument like bank FD or something like that. But here what you need to understand is it might be a decent return for a debt instrument, but here we have invested in a market linked instrument where we are investing for a long period of time and taking such a risk. But even then, if you are getting return which is comparable to a debt return debt instrument only, then it's completely not justifiable. So the returns in the 8% scenario is, or the 4% scenario is also not guaranteed. So you need to keep that in mind. So it can go even lower than that. These returns might seem slightly higher than those of other ULIPs available in the market, but still they are still low compared to other market linked products where returns substantially surpass the inflation rate. Additionally, this plan lacks transparency in its investment and imposes high charges, making it an unappealing option. So as from our analysis, what we can get is it's not giving us justifiable or even an inflation beating return. So this is definitely not something which can be sustainable for us in the long run. So what we are going to do now is we are going to compare and do a comparative analysis. So we are going to compare the ABSLI Platinum Gain Plus plan with other market linked products by exploring a different investment strategy. So instead of investing in an insurance cum investment policy like ABSLI Platinum Gain Plus plan, what we are going to do is we are going to separate the insurance and the investment vehicle separately and invest separately. So for life cover purpose, we have chosen a pure term insurance policy where the metrics are also completely similar or kind of similar to the ABSLI Platinum Gain Plus plan. for a more fair comparison. So for life cover, a pure term life insurance policy with a sum assured of 20 lakhs cost an annual premium of 16,600 with a policy term of 20 years and a premium payment term of 10 years. So instead of paying 2 lakhs annually, by opting for a pure term policy, we save 1 lakh 83,400, which then can be invested based on your risk tolerance. But here we have chosen equity related instrument like ELSS mutual funds, which is an equity linked savings scheme. Why we have chosen this? It all because it also has a track record of consistently performing and giving us 12% per annum if we choose to potentially invest in it for more than 7 to 10 years. So based on that track record also, we have chosen to invest in ELSS mutual fund, which is a high risk fund only. But if you choose to invest in it for a long period of time, you can potentially gain better returns. But if you are someone who's not willing to take a lot of risk, then you can definitely opt for debt instruments with a good high yielding better returns. But here in the combination of term insurance plus ELSS, you get 1 crore 40,000 935 rupees. So here the maturity proceeds of ELSS are subjected to the capital gains tax. So the pre-tax value is 1.11 crores with a post-tax value of 1 crore. So the IRR for the ELSS investment combined with a pure term life insurance policy is 10.67%. So if you compare it with the return you get in ABSLI Platinum Gain Plan, it definitely is double the amount and more than that, which is 1 crore even after paying taxes. And also the returns, the IRR you get is definitely an inflation beating return which surpasses the inflation rate. So this investment strategy offers you with better risk adjusted return and transparency in investment, which is the factors that are lacking in the ABSLI Platinum Gain Plan. So this alternative investment strategy gives us better returns and better transparency in terms of investment. So finally, if you look at it, like, should we invest in an ABSLI Platinum Gain Plan? Is it worth investing or not? What is the final verdict on our analysis? What we can see is this is a plan which claims to provide life coverage until the end of the policy term and the invested fund value at maturity. But long-term investments are typically expected to offer higher returns that can lead to wealth accumulation. But however, despite its long-term nature, this plan fails to generate returns that can outpace inflation. So primarily due to its high charges and also because of its high agent commission. And consequently, this plan is not suitable for wealth accumulation and may even leave you short when your financial goals are due. So the combination of inadequate sum assured and low returns makes this plan an unattractive investment option. So what you can do instead is there are alternative effective investment strategy for, like, you can choose to build a diversified investment portfolio of equity and debt, especially equity investments that can offer superior inflation beating returns and also cost effective. For life coverage, you can choose to invest separately in a pure term insurance policy for a more affordable premium, even for a higher coverage. So opting for a policy like this is the best way to protect your family. So investing separately can help you gain better returns and also help you financially protect your family. But if you're still struggling for guidance and you need a professional guidance, then you can definitely consult with a certified financial planner to help guide you in your investments and your financial journey. So definitely consult with a certified financial planner for a more helpful and guided investment. If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.